Under the Nivesh India initiative, ET Now this week travels to the garden city of Bangalore and tries and answers the queries with regards to investing and technology.
If you today want to start your investment, what you need to do? You need to identify an intermediary. Intermediary means, don't get misled, you should deal with authorized intermediaries only. So make sure that you are dealing always with SEBI registered intermediaries. And whenever you are doing your investment, please do it in your name, in your account, and don't say to intermediary that you do it in your account, I will adjust later. That is against you, you are risking your capital. When you do transaction, please make sure that you document all your transactions, you collect all the documents from the intermediary, and today being technology era, you can also have online access with the intermediary that you are dealing with and get real-time or end-of-the-day reports on your laptop or mobile, whatever, but you please store these documents. Tomorrow, if at all you encounter any problem, these documents are the ones that are going to save you. And last but not the least, please always have the distinction between investing and trading. Never confuse investing for trading. We have seen in our experience, many investors, what they have to do is, when they enter as investor. In between, without their knowledge, they change their mindset to trading. When in trading, they encounter undesirable circumstance, they will switch back and come and complain to us, I was an investor, I never knew, I did not want to do this kind of transaction. So please, from the beginning, be clear whether you are investing or trading. Investing has its risk, trading has its own set of risks. Trading risks are higher than the investing risk. And please do take a long-term view in investing. Happy investing. Thank you very much.
If you really try to tag along the growth story of India, equity is the only way. Which other asset class will ensure there is a 14%, 15%, 20% return? It's only equities. But why doesn't it work? I think primary reason is we don't do certain things right. What we don't do right. Unfortunately, we follow a peculiar herd mentality when we invest in stocks. We hear something, we overhear something, we read something in some magazine, some newspaper, somewhere, and we jump to buy that. Or my neighbor has bought it, my uncle has bought it, we jump. Without understanding even what the company does, what the potential is, what the future is. And after that, that is the first mistake we do. The second mistake is we start panicking. The first sign of problem, we start panicking. And we try to exit, at whatever cost. The third mistake, sometimes we fall in love with the stock. The price has gone down. We probably should exit, but we don't exit. These are the mistakes we make. We have to stay away from these mistakes. I'll just give you very broad 2-3 things what you should definitely look out for. One, look at the management quality, their past track record, what they have been doing. It's extremely important. Next, look at the industry. Don't buy industries which are down and out, unless you have a contrary view or something else. Finally, also look at the company itself. How has it been performing? What are the potentials? And believe me, nowadays it's not difficult. Everything is available in the web, in the net. If you can't do any of this, I think you can follow the mutual fund route as well. And above all, don't panic. Markets will remain volatile. So have faith in Indian equity markets. I think the time is great. Look forward to all of you joining the equity bandwagon, investing in India, investing in India's growth. Thank you very much.
The thing that I want to tell you is that markets will change in the next 2 or 3 years. In 1992, the biggest stocks in indexes were textile companies. In the late 90s, it was FMCG companies. In the mid-2000s, it was IT companies. Now it's banks. Tomorrow, it will be something else. Every time we'll see a change. There will be a change in leadership. Don't be afraid to change your stance, saying that I will only sit with FMCG companies because they were leaders in the past. The other thing that I also want to tell you is that if you have to fail, fail early so that you can take every lesson home and be a smarter investor the next time. Like they say, it's bad. It's not bad to make mistakes. It's bad to make the same mistakes again and again. I hope and I wish that all of you will have a great investing time forward. Thanks so much, Neeraj.